Welcome to the CFA Level 1 Practice Test 2. Domain Financial Statement Analysis Part 2. In DuPont analysis, which component best measures operational efficiency in generating revenue from assets? A. Net profit margin. B. Total asset turnover. C. Financial leverage. D. Not applicable. Answer is B. Total asset turnover. Omega Corp's debt-to-equity ratio of 1.5 best indicates what? A. Operating efficiency. B. Short-term liquidity. C. Financial leverage. D. None of the above. Answer is C. Financial leverage. Volatile returns from speculative forward contracts most likely affect which analyst assessment? A. Fixed asset turnover. B. Quality and sustainability of earnings. C. Deferred tax liabilities. D. Not applicable. Answer is B. Quality and sustainability of earnings. Financial statement analysis supports users in what primary way? A. Making more informed economic decisions. B. Setting the company's dividend policy. C. Auditing the company's internal controls. D. None of the above. Answer is A. Making more informed economic decisions. What is the primary benefit of using common-size financial statements? A. To facilitate comparisons between companies of different sizes. B. To assess a company's compliance with accounting standards. C. To determine absolute monetary change over time. D. Not applicable. Answer is A. To facilitate comparisons between companies of different sizes. Key consideration when using financial ratios for analysis is A. Industry averages are definitive benchmarks. B. A single ratio provides sufficient insight. C. Ratios require careful interpretation within context. D. None of the above. Answer is C. Ratios require careful interpretation within context. Under IFRS, if an impaired asset's recoverable amount increases, how is the prior impairment loss treated? A. Reversal is prohibited. B. Reversal permitted up to carrying amount without impairment. C. Reversal permitted up to current fair value. D. Not applicable. Answer is B. Reversal permitted up to carrying amount without impairment. Which is least likely a motivation to issue financial reports of lower quality? A. To improve personal career prospects. B. To enhance transparency for regulatory bodies. C. To decrease companies' perceived risk. D. None of the above. Answer is B. To enhance transparency for regulatory bodies. What is the lease liability recognized for a 5-year lease with $20,000 annual payments at 8% interest? $79,854. B. $84,247. C. $100,000. D. Not applicable. Answer is A. $79,854. Based on given data, the company's defensive interval ratio is closest to A. 126 days. B. 137 days. C. 150 days. D. None of the above. Answer is C. 150 days. Thank you for watching. For more learning videos and tutorials, subscribe to BSP Trainings.